Welcome to the Final Bar, the show where we check out the most interesting charts to get set up for the following week. With some intermarket studies, we'll be finding out the inflection points for minimum risk and maximum reward. I have Gretchen, our producer, on board with me. Good afternoon, Gretchen. How are you doing?
Afternoon, Greg. I'm doing well. It's very cloudy here in Seattle today. How are you doing?
We actually had a little bit of rain, and I would love to be golfing, but instead we're at the bar. We're at the Final Bar, and I am the bartender today. So we have lots of charts to get through and lots of bars to stare at. So I am going to cover it off pretty quick. We have so much I want to share. So let me jump into it. Today, the biggest thing I want to make sure that we cover off today that I think is important as we build up this Final Bar show is to give you some ideas how to work the website and make some money. So that's kind of the focus of the show. The other show I do, the Commodities Countdown, is focused specifically on commodities, and I vary out of that every now and then into currencies and things. But this show, I really want to show us how we can set ourselves up for success and drive some money out of the website. So today's agenda, there's breakouts everywhere, but I still have friends and people that I'm talking to that have analysis paralysis. They don't want to put money to work yet. They're not sure if this breakout's real. They're not sure if it's hold. And so we really have to get past that. And the bottom line is the only way to do that is to look at price action. And so we're going to go figure out how to do that on the website. So we're going to work through some of the websites and some of the real-time examples, and then we're going to talk a little bit about diversifying to try and help people understand how to manage risk. And I don't know if we'll get into the diversification today just because I have so much other stuff I think is important to cover off, but we'll see if we can get there. Okay, so first of all, let me just go grab the home page, members dashboard. If you're on the website, this is one of the strongest places to start. And the main reason that you want to start here, and these are just some little clues that I have on kind of built up over the years. And what I like to look at is right here on the actual member page. What I see here is, when you look down here, you want the NASDAQ to be one of the top performers or the NASDAQ 100. And normally in a bull market trend, you'll find that the NASDAQ is one of the quicker movers. And so that should be a quick guide for us. And the Russell, while it performed well today, it's also up against resistance. So we're going to talk a little bit about that. What I want to show you, in case you're not aware, is that on this website, you can click on the name. It'll bring up the chart for the Russell, even though it's not one of these tabs at the top. And you can click in. And if you have gallery view set up with your own customized charts, you'll get your customized charts. If you don't have them set up, then you'll get default charts. So here's the Russell on the 10-minute. And you can see literally, 1532 was the low the other day. And all of a sudden we're at 1609. So this thing has exploded almost 100 points straight up, 6 or 7%. And we're talking about the breakout. So what is difficult is when the market keeps pulling back, we're worried that it's going to keep making lower lows. And so let's go down to the daily chart. And what I want to show you here on the daily chart is we've had all of these big swings, and even every big swing, trying to buy near the lows has helped a lot. So getting these huge surges up is a big part of being able to make money. And not every stock is going to be surging up, but what you'll find is in the days leading up to the base, you'll have stocks either start to break out to new highs. You'll have bases being built. So if you have pullback indicators like full stochastics or something like that set up, all of those will start ringing the bell that they're all starting to move higher. And so even though you might like to trade long-term, when you're in a choppy market like this, and really since even October, didn't feel like it in October because December, January was such a ramp. But October was a pullback. Then we had a huge surge, a pullback, then a huge surge, pullback. So it's been choppier than it has been for all of last year. But the important thing to remember here is that you can make enough money from here to here to make your year. when you have big choppy markets that are oversold, and all of a sudden the stocks that were moving up 0.5% a day are now moving up 2 and 3% a day. So it's pretty important to try and get that thrust. And the point I want to show you here on the Russell is we are right at the level now where the Russell looks like it's trying to break out to new highs. And so if we were looking for friction, this is a great place to look for it, because now it has to explode to all-time highs to get there. I actually think it will get there. And I'll show you why on this particular chart in just a second. And then when you go to the weekly, obviously, the one thing that is important about the weekly, you just want to look at the RSI. And if it's holding above 40, usually you're in a bull market. So if we change that to the Canadian stock market, it actually went to 30. So that usually would signal that we're in a bear market. And when that happens, we want to be more cautious and watch for pullback. So let's just show you the TSX just to keep your eye on this part of the RSI. You'll see it dips down to 30. Okay, so we get this dip down to 30. Now what we're worried about, not worried about, but typically this is a bull market signal when it's touching 70, and this is a bear market signal when it touches 30. So now we're rallying up, and now the real question is, can we get above 60 or 65 on a weekly chart? Okay, let's go back and look at the Russell. We don't have that. Okay, so we're still in a big bull market here. So we would expect the Russell, after consolidating for this period of time, to probably break out to new highs. And unless you're trading the index itself, you're going to be trading some of the stocks that are starting to work. And as those stocks are making higher highs and higher lows, then you're going to end up having an uptrend that you're participating in. But the problem is every time we get a pullback, people are afraid to buy, and they get analysis paralysis because they're worried about losing. And actually, it's easier to buy down there than it is to buy way up here now that everything has run up 7% in 5 days. So I know it's difficult, but it's a really important concept. But let's just quickly look at this MACD, something as simple as the MACD. Every time we go above the weekly signal line, it runs for a long period of time, and the market can really make a good run. So this was November 2016. We all remember it went on a big run from there. It gave us a sell signal here, and really the market just walked sideways for 4 or 5 months. So if you just sold on that, that was, you weren't leaving any real money on the table. The one thing that is important here, notice how this high, this high, this high, we just kept banging against the top, and then we settled for 4 weeks. Then all of a sudden we break out to the upside, and we immediately fail and go down. So anytime you're at previous highs, what you want to watch for is a breakout, especially on a weekly chart, or a failed breakout. So you get up, and then the first thing you do is pull back, so you kind of get sucked in and dropped out. When you're buying near the lows and the market starts to turn up, it's a lot easier to try and get a trend up. Now that we're up against 3 or 4 different resistance bars here between, we're at 1603 and the previous high was 1615 and 1609. It makes it more difficult to put more money to work if you were trading the index tomorrow. Now, there's lots of things working under the surface, and that's the really important thing. But the other point I want to make is down here, looking on here, every time you got this positive buy signal, and so let's just walk this up, this positive buy signal coincides with the middle of September right here, and sure enough, look what's happening. We were just breaking out to new highs, and as we broke out to new highs, it was very bullish. And here we are again crossing here, and where are we? We're sitting here just ready to break out to new highs. So everything is set up for this market to go higher. The earnings were great. All of the news channels will try to find something to talk you out of the market. It's Iran and the price of oil. It's if oil's going to go up, then you just want to buy oil. The point I want to make is that the news media try to find reasons to get you to watch TV, not to make money in the market. They're trying to give you infotainment, and that info is all of the things you should be concerned about to make money. And more importantly is the price. So today, somebody asked me, this stock has a low price earnings ratio. And I said to him, what's a price earnings ratio? And I don't mean to be glib about it, but a price earnings ratio of 10, of 30, of 20, of 50, of 100, of whatever. All of the stocks I bought this year, I don't have a clue what the price earnings ratios are. I'm trading the price pattern and the setup. And, Amazon has a price earnings ratio of 200. So what is a good number? I think higher is better if you're looking for outperforming stocks. But, the problem is you don't, I haven't found price earnings over us at a certain number. At 12, it's a great buy, or at 200, it's a great buy, or at 50, it's a great buy. So the only way to really do that is price action and momentum. And I think one of the biggest advantages we currently have is in this choppy market. We have been given some great signals. And if you just go back through the blogs for the last couple of weeks, all of the signals that we've been getting that said this was a buying opportunity. And for people who bought the 1st of April, we've been pretty much up every day since. Sorry, every week since on Russell. And, last week we pulled back and made a lower low, and then we immediately reversed and went on to higher highs. So there's been lots there. Now, again, the purpose of technical trading is to try not to use the news to trade, because the news isn't going to be timely. By the time NAFTA is approved, a lot of the NAFTA stocks are going to break out. By the time some sort of implication of Iran happens to your portfolio, the defense stocks will have run long and far. The oil stocks, I think back in 1992 or 1993, the moment that the first bomb dropped in Iraq, the price of oil plummeted, and it was everybody else was thinking it was going to go to the moon. So say is that the Russell is now right at that triple top. And so it's a place to be aware of, not to be scared of, but it's a place to be aware of. We're starting to get buy signals on weekly charts. And so, so this is pretty important. Now, here is the S&P 100. It broke out to new highs, soaring. Here's the daily chart, and we had this big downtrend that everybody's been talking about, and we've broken above this downtrend. So now, not only have we broken the downtrend, we've also broken this high. So we have a high, a higher low, and a higher high. That's the definition of an uptrend. And what you see over here is we had a high, a low, and we didn't make a higher high, and we fell apart. So testing the prior high is important, and we're doing that right now. On the Russell, we're doing it, for the most part. Even on this chart, we could say we're testing the prior high. And on the actual S&P 500, we're doing the same thing. Okay, so if you're using this chart, it's a really quick way to scan through. And again, you can customize these. Go to Chart School and look up Gallery View, and it'll show you how to create your custom charts on Gallery View. So the big picture is that the market is trying to resume its uptrend. And as long as it's above the 20-week moving average, that's a pretty good place to see bullish activity. Even if you didn't get in yet, there's still lots of opportunity. I think, there's a lot of good things going on in the market. We don't really get a good opportunity where we get deep pullbacks like this and everything wants to run. So in general, I'm bullish, and I've talked about, on Commodities Countdown, I talk about breadth material and all that kind of stuff. So I'm not going to go into it today, but I do want to cover off some of the other information. So just here's market summary end of day. And this is found on that same homepage. So let's just go back here. So right under this main window, this is the market summary button. And then over here on the right, if you scroll down to the bottom, there's market summary, sector summary, and industry summary. If you go to market summary, that's going to give you this type of information, what's happening. And then up at the top here, you can set it for end of day or intraday. You can have ETFs or combined. So if you just want to find stuff that's tradable. But what I do when I look through here, what I'm analyzing for is just to see what's going on. And you can see it didn't matter what you were in, everything was running. Here's one of the more interesting things, was that the utilities was one of the top performing sectors today. And I think the reason for that is that the bond market looks like it's made a double bottom in a chart on TLT as an example. Um, let's just go there briefly. So TLT, and what we see here is this double bottom pattern. It looks like it's built here, and all of a sudden now it looks like we're going to break this downtrend and start to work our way higher. So if bond prices are going higher and yields are going lower, people are more interested in bonds, which is exactly contrary to what most people are thinking right now. If you listen to the news, because they keep talking about this 3% level. But this is working its way higher, bond prices. And if this ends up being a higher low and we've got this positive cross right here, bonds would start to accelerate. Well, one of the reasons that utilities sold off so hard was that utilities have a lot of debt because normally they borrow a lot of money at the front end and then they pay it off over time. So as debt costs increase, their margin struggles. So utilities are heavily correlated with what the bond yields are doing, either positively or negatively. So in this case, utilities are performing well, but I think that's a bond market performance issue, not a safety trade. So I think that's important to look at. Now here, just looking through what's working well, usually what I try to do when I look at this list is I'm looking to see how are commodities doing. And, obviously oil's been going lately. Gold had a great day today. But, here's semiconductors, telecoms. I'm actually surprised telecom's up. Those telecom charts are quite ugly. Computer tech, disk drives, like this technology stuff is right near the top. So that looks pretty bullish to me. Broker dealers, financials are kind of in the middle. And down at the bottom here, computer hardware, this is kind of the group that Apple's in and stuff like that. But some of the other commodities in general were sitting a little bit lower. I still think the commodities look good, and I don't want to talk about commodities on this show because I talk about them on the commodity countdown. But even if you just go to the country index and look what's going on here, here's Mexico and Brazil and Mexico. Here's Russia. A little farther down is Canada and Australia. So in the top 7 countries today, most of them are commodity related countries. So Brazil is big for offshore oil and a bunch of mining. Same thing with Mexico, that kind of thing. So if you're looking just quickly in here and you want to see what commodities are doing, you should see these commodity countries start to be at the top. And I think emerging markets typically follow commodities. So if that emerging market ETF is near the top, that's helpful as well. Okay, so bond yields were up, it says here. That actually surprises me a little bit, mostly because the TLT looks like it's trying to rise out of this space. Anyway, we'll keep watching those. Here's all of the commodities, and the ag commodities were a little slower today. Recently, they've been doing very, very well, but I will say that the metals really performed well today, and almost every other currency rallied against the US dollar today. And right at the top here are 3 commodity countries. So that gives you a clue that the commodities were one of the best performing parts of the market. Same thing here going into the world indexes. There's Brazil right at the top. Those are all very helpful. And so I would encourage you to go there and at least just get a feel for what's moving. Retail was one of the worst performing groups today. A one day doesn't make it a trend, but looking in here, here's technology for the week. It's starting to rise. We had NVIDIA earnings after hours, and it's probably going to pop the market again tomorrow because it was up really, really strong. Just as we look through here, the defensive areas were the weakest performing charts today. So again, or for the last week, so I think we're going to get more upside here. The market looks like it wants to go higher. So these are some of the ways I use the website. Now, the other point is when you're here on the free tool site, you can get to a lot of these things from this area here. So those same things that were on the market on your homepage tab on your members dashboard are also found down the side here. And the industry summary is found here, and you can do intraday or 1 week or 1 month. And last time I showed how I used the intraday to find toys and stuff like that. So this week, toys and gambling have been top of mind. They've been soaring. And if we click on these charts, all of these are looking pretty darn good as they try to move on to new highs. Industry groups, when you get involved in a stock and the whole industry group is moving, there's so much less friction. It's able to run really, really well. And one of the things about NVIDIA is it has run so much, almost, I don't want to say by itself, because lots of the semiconductors did well, but it was a bit like Apple and the other telephone stocks. Apple was doing so well, but the other ones weren't really following along. So in terms of industry, it didn't really work in that example. But this year, semiconductors have been, for the most part, on fire. A lot of those charts have been performing really, really well. And I would encourage you to look in on those different charts. But as an example, here's gambling. And if we click through on gambling, this stars group, this chart, I showed it a couple of weeks ago, and, it's just going straight up. There's one in Canada called toy.to, and it is really moving very, very, very well. I don't know if I have, Churchill Downs was one of the bigger ones. Pushing up to new highs just last week, Kentucky Derby stuff there. And then all of these casino stocks have been performing quite well. So as you look through the groups, these are, intraday changes on these stocks, just massive, right? 10%.
Okay, I found this on the web for Caesar intraday change.
My good old friend Siri thought I was talking to her. But you can see all of these things are running really, really well as they go forward. And this is an obvious area. All of this online gambling, pretty important stuff. And last week I showed how I found it, how these ones were starting to move to the top of the list, and they were quite exciting to look for. So working your way through the website, whether you're going through the actual main charts of the indexes to get a feel for what's going on, moving over to the market summary and working your way through there, getting into these industry summaries and starting to, just stand back and look. And these toys ones are doing good. Here's auto parts and automobiles. They're looking very good, which is hard to believe because we just heard Ford's closing their plant because they can't get parts for their number one selling vehicle. Tesla's been under pressure, all that kind of stuff. And yet these charts are trying to, make a base and turn back higher here with a higher MACD. So here the MACD is making lower lows, lower lows, lower lows. All of a sudden it's making a higher base to work from. That's usually a great place to get on board and get a trade headed north. So when you're looking through the website, I think these are all valuable tools that are just sitting here. So let me go through and show you how to get to them again. So first of all, market summary, sector summary, and industry summary are sitting here on the right-hand side. If you want to use it from the members page, these same tools are available down here on the scrolling area of the chart. Whoops, I pushed too many buttons there. So you want to scroll down to the reports area, and they're all sitting in here. Now, on the home page, just one more time to go through this to make sure everybody's aware, you can click on these different tabs, and on these different tabs, these are all of the big moving stocks for the day, but I've never heard of this stock. It's up 66% today. It's probably too late. But looking at the most active, sure enough, NVIDIA, here it was, up 1.65%. It was breaking out to a new high as it's going into earnings, and coming through earnings, it's probably going to go ballistic again tomorrow. So these are very quick to look at, and you can do the top 10, or you can click by top scooters. And what you find here on the top scooters is you can just click on the candle glance view, and that's going to show you all of the charts at once. So here's Netflix. It looks like it's sitting here just ready to turn up here and break out. Twitter pushed to a new high, higher high, higher low, starting to make changes like that. Here's network appliances, and it's breaking out to new highs. So really quickly, you can look at this chart and see if there's any patterns you like to trade. Here's Petrobras set up almost exactly like Netflix is setting up right now. Horizontal top. I like to call it setting the table for dinner, and then dinner shows up and these things just take off to the upside. So there are lots of reasons to get excited about these stocks. There's been lots of things going on. And I think more important than listening to the news and let you talk you out of the rallies that have been going on is to make sure that you're paying attention to the stocks during the pullback and try and get these things starting to move. And so I think it's critical that you almost, I don't want to say ignore the news, because it's important that you realize that something's going on in Iran, but I don't think it's important unless you're trading crude oil, or unless you're trading, some sort of shipping group that goes in and out of Iran. Is Netflix going to change because of Iran? I don't think so. And so it's those important details of trying to find the stocks that you want to own instead. So let me briefly look. I'm just looking at some of the questions from the group today, and one of the questions is, small caps are already at all-time highs today. And one of the things we found was when the US dollar surges, and let me go get this chart for you because I think it's reasonable. Can't do it this way. So I have a chart that I try to keep track of with the US dollar. So let me just go get it, and I'm going to put it on 60-minute view real quick here. It's not available, so we'll use UUP. And what we see on the chart is that, this is a pretty big uptrend. And now all of a sudden, so this is 1 week here, this little line demarks Monday. And so here we are, we're trading near the lows of the week. That's not a big deal. But obviously, if we broke down, another 10 cents on UUP, we would be at the lows of last week. So that would be an outside reversal on a weekly chart, and we would probably expect commodity-related things to do really well. The small caps have run up because if the U.S. is doing well and the U.S. currency is doing well, it makes foreign markets go down. So most of the people move money to non-foreign market related stuff, which is small caps. And that's why small caps surge when US dollars surge. So I think that's a pretty important step. I've got just a couple of minutes. For the poll, the definition of short term is just, the US dollar. Do you think this run is done, or do you think it's just going to keep continuing? And then there was one more question about Altria. So let me just pull up MO. And let's go to a bigger picture chart. So this chart is clearly gapped down and is out of favor. Now, it all depends on your trading style. If your trading style is to just trade short-term basis, I think if this starts to get above 56.79, you want to own it, and you could trade it for a rally for 3 or 4 days. I think there's a good opportunity that probably works out. I tend to like looking at the full stochastics, and this is starting to give me a signal here that it wants to turn up. Hasn't quite given it yet. But again, it's a defensive area of the market. It just broke down to new 2-year lows. So if it doesn't turn up right away, then I would probably let it run. Now, with that, I think that's probably all I've got today, but hopefully I've shown you some other ways to find some things looking in the market. So thank you for joining us on today's show. The Final Bar, where I'm the bartender, airs live on Thursdays at 5 p.m. Eastern and can be found on Stock Chart's TV schedule for your viewing convenience at other times during the week. It is also available on the Stock Chart's YouTube channel. So with that, I want you to have a great weekend and good trading. Don't get stuck in your analysis paralysis.